Hi, Eric. Are you there?
I'm here. Hi.
Okay. Okay. Well, welcome to another session about long distance real estate investing. So my name is Jennifer Ward, and I host the long distance real estate investing meeting once a month on every last Tuesday of the month. And my goal is to bring in guest speakers to do market spotlights about all the different markets out there in the US that we have the potential to invest in. And these are investors who already have properties in those markets and have a team and boots on the ground to be successful. So tonight I have Eric Hughes with me, and he invests in Memphis, Tennessee. So very hot topic market, I would say, just continuously year after year. And he's also a coach and has a blog called the Rental Income Advisors, or the website or his business is Rental Income Advisors. And he does some really interesting blogs on there, tracking his portfolio of up to 20 doors, right, Eric? Is that right? Okay, awesome. Yeah, so tracking his 20 doors. So it's a great I think, flow of information that you provide with your monthly blog post about the performance of your portfolio. So I think that's really wise and great for people to continuously read to really get a good understanding of what the market's looking like, as the year goes on. So well, Eric, let you maybe say a few words of introduction about yourself too, if you don't mind.
Yeah, sure. So thanks for that introduction. So yeah, my name is Eric Hughes. So I'm a real estate investor in Memphis. I used to have a career in the retail industry, but I was able to use my cash flowing rental properties to transition out of that type of work. So focused on real estate now exclusively. Yeah, and as Jennifer mentioned, I write the blog at rentalincomeadvisors.com. Which does track my own portfolio and then highlights, tries to do sort of analytical deep dives on some important investing topics for particularly single family rental investors who invest remotely. So it dovetails nicely with Jennifer's group. Yeah, and I am a private real estate coach for new rental property investors as well, helping them to get started on their journeys with rental properties. So
and Eric, where do you live?
I live in Manhattan, in New York City. So
okay.
I've lived here for 15 years.
Yeah. Yeah. So I always hear about New York being extremely expensive. So I'm not sure if that was your main motivator for starting to venture out and find cash flowing markets.
Yeah, it was sort of an evolution for me as far as my understanding of real estate and what I wanted to do with it. It is expensive here, that's for sure. But I actually bought some rental properties, a few small studio condo as investment properties here in New York City years before I started doing out-of-state investing. And those didn't cash flow. It was just sort of a way to diversify and get into real estate, which I sort of was interested in. And I still have those properties, and I'm looking to sell them now so I can put that money into cash flowing properties. So later on in the journey, I discovered, you can invest out of state in these lower cost of living markets, and there is such a thing as a $60,000 house, which is insane when you grow up in New York. And that you could use that as a high yield asset to generate cash flow. And if you had enough of that, then you wouldn't be reliant on your W-2 income. So that was, the main motivator for me to get heavy into the out-of-state investing, was to get out of my job.
Yeah. So what kind of gave you that light bulb moment of, oh, I can start investing long distance? Did you come across like another investor talking about their experience, or just reading a book, or go into a forum? Can you remember?
I don't remember, honestly. Everybody
or did it just come naturally? You're like,
everybody else who gets asked this question has a really clean answer of like, I stumbled on X, Y, and Z, and it changed my life. I don't know. I read a lot. I'm a curious person, so I was exposed to a lot. I did buy my first property on Roofstock, so that was a helpful platform for me to understand the math of out-of-state investing
Yeah.
and just provide sort of a foot in the door to make an offer, get a house, find a property manager, and all of that.
Mhm.
So
Yeah. And
that
can
was pretty
you
helpful.
explain a little bit about the platform Roofstock and like how it benefited you to find properties, like the information they share?
Yeah, so Roofstock is a platform for buying and selling rental properties, single family and small multifamily. Um, they've evolved and they've changed a little bit since the time I was making a lot of purchases on there in their efforts to grow, which is fine. And in fact, they just recently bought Stessa, which is this, online web accounting for rental properties. So
Oh, I
there's
didn't
now
realize that.
a partnership between those two companies. But Roofstock is helpful for a few reasons. First, they provide information in a listing that isn't typically found in an MLS listing, meaning a public quote unquote Zillow or Trulia listing, right, that you'd be able to see. So they have some calculators built into the site so that you can understand the financials. They, in many cases, not all cases anymore, but they have some due diligence done up front, so you can actually look at an inspection right away, right when the
Nice.
listing is live, as opposed to having to go do your own inspection at your own cost.
Yeah.
So those are nice things, and you can also make an offer directly through the platform rather than through an agent. Essentially, Roofstock serves as both buyers and sellers agents in that transaction. So yeah, it's a nice platform, particularly for beginners.
Yeah, absolutely. It kind of just, I love that it is catered to finding rental properties, so it's different than going to realtor.com, Zillow,
Yeah.
Redfin, so it already does a lot of the analysis for you, but I'm assuming you still probably need to do some verification of your own and some additional research, would you say? Or do you find like the data they provide you about the properties are pretty accurate and
Yeah, I mean, you have to do your own due diligence as far as the market and the neighborhood. Although they do also have sort of a neighborhood score that they've developed, which I find, pretty accurate and aligns with my understanding of the neighborhoods in my market.
Mhm,
So they do try to be as accurate as they can.
mhm.
In the pro forma numbers they provide you, I find it to be, again, very accurate, but they also give you the ability to change those numbers, right? So that you can make your own assumptions about,
Oh, that's good.
so,
So if you
and
want to
it's
be
all sort
more
of
conservative, you
yeah, and
can.
it's all dynamic and built into the site. So you can just sort of move the dials, move the levers to what you think are the right assumptions in order to see what the numbers look like.
Yeah, great. Well, if you don't mind, I want to take a step back and just ask, so what made you interested in Memphis in the beginning? And were there any other markets you were looking at simultaneously and like
Yeah,
and lead into why you put the pin in Memphis?
sure. Uh, so I was using at that time primarily Roofstock as a way to research different markets and compare what those properties would look like and how they would perform in different markets. And the primary criterion that I used to evaluate was the yield, meaning the price to rent ratio, and essentially what the cash flow would be relative to the cash that I invested. So trying to sort of maximize a cash on cash return is another way to think about that. So, those are markets where you're going to have low home prices and relatively high rents when you compare to the home prices, right? So how those two things compare is the biggest, by far, the biggest predictor of how much cash you're going to be able to generate with those properties. And generally speaking, both within markets and between markets, home prices will scale up faster than rents, right? So as you might have, compare one property to another, the price would be double, but the rent's not going to be double. The rent might only be 50% higher, right? So you have a steeper curve on pricing. So that basically means as you get into cheaper and cheaper markets and neighborhoods, your yield, at least on paper, is going to look much better. And because my motivation was to generate that cash in order to replace some of my W-2 income, I definitely gravitated towards those high cash flow markets, which tend to be the low cost of living markets. They're not going to be your hot hot markets like Nashville in the same state, or Austin, Texas, or Charlotte, or these other fast growing sort of hot markets.
Mhm.
Memphis is a stable population market, definitely a working class town, and so that causes, among other reasons, the home prices to remain relatively low. So that's the primary reason that I chose Memphis. There are some other nice things about Memphis that I think are appealing. So people like to look at the sort of the job trends and what's going on from an economic development standpoint in each market. So there is some downtown economic development in Memphis, like there have been in many downtown areas in the last 10 or 20 years. So that's good. There's investment. There's also investment from some of the big employers in Memphis, and FedEx and St. Jude are the two most prominent employers and organizations. And they are just examples of two big industries in Memphis, the biggest of which is logistics and distribution. So Memphis is well connected by road, rail, and air, and happens to be perfectly situated to distribute stuff to the eastern half of the country, more or less. So, FedEx has as their global hub in Memphis, Tennessee, as well as their corporate headquarters. But there's many, many companies who are in Memphis and are investing in Memphis in order to build e-commerce and distribution facilities. So Nike is another one who's big there. And then St. Jude, there's a big healthcare industry in Memphis as well.
Mhm.
So I like those industries. I think they provide a lot of sort of stable working class jobs. And they were pretty stable industries, if not growth industries. So particularly on the e-commerce and distribution side, I think that'll be good. So that checked out. That looked pretty good to me. Again, the population trends were stable. There are a lot of cash flow markets where you see declining population. And so that is something maybe to be a little bit cautious about, particularly in the Rust Belt in the northern part of the country, you see that. Memphis has a nice climate. Flooding is rare. There's no earthquakes. There's no hurricanes. It never snows. So, well, I shouldn't say never. It almost never snows. And so those are things generally that make homeownership a little bit easier and less risky and less costly to insure than in some other places. But
Yeah.
the big thing that, as a cash flow investor that you like about Memphis is the cash flow.
Yeah. Yeah. And what about the tax structure in Tennessee? Do they have a income tax, or is it only property tax? And
yeah, so good. I left that out. So thanks
no,
for
it's fine.
reminding me. Yeah, so 3 different types of taxes that you're going to encounter as a remote investor. The most important is your property taxes, which are assessed by local jurisdictions, typically cities or counties, sometimes more than one jurisdiction. So Memphis property taxes, I would say, are about average. They're not among the lowest, but certainly not among the highest that you'll find. And property, the rate of property tax is a pretty significant expense. So, investing in places with like the highest property taxes, like Texas, and even places like Ohio, which has some cash flow markets, your taxes are going to be higher there, and it does make a difference to your yield. So Memphis is pretty good. It's average.
Yeah. Do you
The other
know?
types of taxes you get, I'm sorry, are state income tax and state capital gains taxes. So Memphis has no state income tax and no state capital gains tax. So there's about seven or eight states, I believe, that have no state income tax. Tennessee is one of them.
Okay.
And that's a nice benefit, but it's not really that important to the money you're going to make. It's just sort of like, okay, I don't have to file a tax return in Tennessee, which is kind of convenient. But the income that you actually claim with your rental properties is relatively low due to the overarching tax benefits. So not paying an additional 3, 4, 5% on the income that you report is nice, but it's not really a material difference.
Yeah. And then do you know, like when it comes to the property taxes, if we're in Memphis, does it vary if it's a homestead, like a the owner lives in the property occupancy, or if it's an investment.
Does not in Memphis. And I've read recently that there are some markets that that do tax investments differently, and maybe even short-term rentals differently than long-term rentals. So
yeah,
but not in Memphis.
oh, okay, well, that's good to know.
Tax rate. Yeah.
Yeah, for anybody coming on, I invest in Indianapolis. That's been my market of choice initially. And they do. I think it's like 2% for in Indianapolis, like the Marion County is they charge 2% if it's like considered an investment property. And I think it's around 1%, kind of depending on your jurisdiction, if it's owner occupied. That's what I should say. So,
Yeah.
so that's nice. So whenever you see like the taxes, on the history of that property, then you can safely assume that's what it'll stay at or stay close to once you acquire the property. So
yeah,
easy to work into your numbers.
yeah.
Excellent, cool. So once you had put the pin in Memphis, what was your next step? Since you used Roofstock, did you just go and find a property and put an offer in, or did you decide to connect with any team players that that are going to be part of your boots on the ground in advance, or what was your process like?
Yeah, I made an offer and bought a house, and Roofstock also provides sort of leads for property managers that they've pre-vetted in each market. So I used one of those property managers in Memphis, and that was it. I was sort of off to the races, and I wanted to own a property for a few months just to, make sure I hadn't missed something important in my research, and to sort of make sure it worked as advertised, and it did. And so then I bought a bunch more.
And were you buying turnkey properties basically? So did they require any rehab work after you bought them, or were they, I guess?
Mostly not.
Okay.
Yeah. I bought some that were true turnkeys from a turnkey operator in Memphis, but others I bought from Roofstock and on through public listings or off-market listings from my agent. So. But generally they were rent-ready properties, so either in true turnkey condition or in, good condition. Mm-hmm. So only one property, excuse me, so far have I done any significant rehab before a tenant was placed. And that was just one of the more recent properties I bought.
Oh, all right. And then with Roofstock, do they generally have tenants already in place since it is all about it being a rental property by it's on Roofstock, or are typically people post it when it's vacant?
It's both, probably in about the same ratio that you would get, on MLS. So they have probably, I don't know, at least half occupied and the rest vacant.
Okay, gotcha. Do you have anything you can show as far as like can we pull up maybe a Google search of one of your properties just to kind of give people an idea of what a Memphis property looks like? And
sure.
Yeah. And I guess if you could go into like explaining what you look for as far as in regards to the properties themselves, like size wise, and maybe we can get into your analysis.
Yeah, sure. Should I present, or how should that?
Yeah, if you want to go ahead and present, that'd probably be the easiest. So that way you could also, if you're wanting to open up some of your analysis as well.
Yeah.
But I've in the past just kind of put in an address and in Google Maps and do like street view to kind of give the front picture of a property at least. But if you have quick access to any of your other properties, like the internal or an old listing for them, then that'd be good too, but whatever's the easiest. So, and while Eric is pulling that up, so thanks for everybody who's joining us live tonight. Like I said at the beginning, my name is Jennifer Ward, and I'm your monthly host for Long Distance Real Estate Investing. And I do a market spotlight every month. So I bring in investors who are investing long distance in various different markets, and sometimes they incorporate their boots on the ground, so like a realtor or property manager. But we just go over questions like we've been discussing right now to get more of a deeper look into a particular market from an investor's point of view, from investor's experience. And starting in June, we're not going to have one, but in July, we're going to actually be doing it the second Wednesday of the month. So we're switching the dates or the day of the month starting in July to the second Wednesday rather than the last Tuesday. So, all right. Were you able to find
So Jennifer,
something?
my system preferences are not set up to share via Zoom, and I'd have to quit and come back in apparently to do that.
Oh,
So,
okay.
but I can give you an address if you want, and then you can find it on Zillow or something.
Sure. Let me, oh, that's weird. I wonder, because I have you marked.
It's on my, no, it's on my end through my system preferences, but.
Gotcha. Okay.
To quit.
Yeah, let me go ahead and pull up, what's an address real quick?
Why don't you look at 1332 Quinby, Quinb.
You said Quin
BY.
Okay. Memphis. 1332 Quinby. All right. And go ahead and do street view again. And I'll go ahead now and share my screen. Okay, so does this look correct?
It is, yeah. You're not going to see much in the old street view because there were, yeah.
Yeah. Well, lets me zoom in a fairly decent amount. So it looks like it's a brick ranch property. Is that about right?
Yeah, it's a 3-bed, 1-bath.
Nice.
About 1,000 square feet. And it's very typical of homes that were built in Memphis in the 40s and 50s. Primarily, I think I can actually check. This home was built in 1948. And this is my most recent property. Bought it just a few months ago.
Oh, okay.
And this was one, one of the things I work with my private clients is to try to be able to gauge where the property is on sort of, its roller coaster ride over time, right? So you can have a property in turnkey condition where everything's new and everything's good, or you can have essentially a property that's not rent ready, it's not livable, it needs, a big rehab to get there. And then there's this whole sliding scale of places in between, and just trying to understand where each property is on that spectrum so that you make a good purchase and you pay an appropriate amount. There are investors who buy at the very top and who buy at the very bottom, and both strategies can work. So it's really just a question of knowing where it is. Now, this property is interesting because it was a former turnkey property. So it had a turnkey rehab, I think, in 2014.
Okay.
So it was about 6 years, past its turnkey. But you still basically have all the turnkey finishes, hard surface flooring throughout, inside, new roof, new HVAC, again, as of 5 years ago or so. So it was a pretty attractive target. It's in a C neighborhood. So the house, I paid about $70,000 for it. It's rented for $775,000, and there was a tenant in place when I bought it.
Great. And then how long have you been investing in Memphis now?
About 4 years.
4 years. So do you remember like how much you were paying for properties around that's similar to this about 4 years ago?
Yeah, I bought a property in this neighborhood. It was one of my first ones. And yeah, I paid about $55,000 for it all in. So like a lot of places, yeah, the prices in Memphis have gone up quite a bit in the last 18 months, and they're still going up. So
Yeah. How much would the properties be, you think, about 18 months ago? Did it go up to around the 60,000s and then just kind of jumped up to the 70,000 marks as of today?
So, I wrote a blog article that looked sort of at the total performance of my portfolio in 2020. So pretty much across the board, prices went up.
Yeah, let me
You
pull
want to
that
pull that
up
up?
maybe, if you don't
Sure.
mind. That might be helpful. So
Yeah, go into most
this
recent
is,
there.
yeah, this is Eric's website. So where you can find his blog, Rental Income Advisors. Should I go into most recent?
Yeah, go into most recent.
Okay.
And then we'll scroll down maybe 10 or so. That, by the way, if you just scroll back up, if people want a closer look at the property we just looked at,
Oh,
that's it.
yeah.
Memphis Rental Property 19. So it's got all the details, some more images, and all the numbers for the property as well.
Oh, wow. Yeah, that's nice. So that's what it looked like when you bought it?
Yeah.
Very clean. It looks like it was a turnkey right from just recently.
Yeah, it wasn't. It's still a 6-year-old roof, a 6-year-old HVAC. These are
Yeah.
the pictures that were taken before the most recent tenant was placed. So it had a rent ready, a regular turn
Yeah.
to make sure everything was clean and ready to go. But
And you bought this one for around or was listed for 76,900. Is that what you, oh, and you
yeah,
countered back at 69?
yeah. So I got it for less, which even, looking back 4 months ago is shocking because like nothing is going below ask today.
Yeah. Yeah, that's a really nice property. Don't really have to do anything. Yeah.
I'm a lazy investor. The less I have to do, the better.
I like that style for sure.
So that's the one right there. How
Right
to
here.
perform an annual checkup. Yeah.
Mhm.
So this is a lot of my blog posts are long and detailed and have a lot of analysis in them. So I try to provide meaty content, but somewhere in this article, I sort of show what, at least according to Zestimates as a proxy, what the appreciation was on the properties for the 2020 year. And it was, I think, 11 or 12% across the board, which is a lot. So
Yeah.
prices are, I think that's the chart there.
Right.
Yeah.
Right. Oh, yeah, that's great. A great snapshot to show. Yeah, I think that's what everybody's probably close to seeing around the market. I know it's definitely in the I would say like around 15% to 20% in Indy right now. So something that they, I think a lot of these Midwest or, cash flowing markets, like I like to refer to them as, you just didn't anticipate the double digits, that they've always just generally been in the single digits, and that's okay as long as it wasn't depreciating. That's all. I was more concerned about cash flow, which sounds like you as well.
Yeah, I mean the appreciation was great last year, but that's not my focus when I'm investing.
Right. Awesome.
Just a nice bonus.
Yeah. So I guess and then like with the taxes, do you know on the top of your head, like maybe for the property that we just are looking at, so if you paid like low 70,000, how much taxes you're looking to pay in the year or biannually?
Yeah, definitely. Yeah, if you flip back to the other post on this particular house, you can find sort of all the numbers in the expense structure that I'm expecting.
Okay, nice.
For the property. Should be a screenshot of my, right? No, yes. So this is a free calculator, by the way, another plug for some free tools on my site, but you can download this for free off my site. It's just a calculator that helps you to understand what your cap rate and your cash on cash returns will be on a target property. So in this one, it's rented for $775, as I mentioned, and then you can see what the monthly expenses will be across my mortgage, my expected repairs and maintenance, property taxes. That's, you can see that there. So it's 80 a month. So it's about $1,000 a year in property taxes on this house.
Okay, great. Yeah, it's a nice cash flow right there. And I love how, you're factoring in everything. So obviously not utilities because your tenants are paying the utilities, I assume. So
That's right. Yeah.
yeah. And then property management. So you're paying less than 10%, it looks like, for property management.
Yeah, I'm paying 8%.
Right. Okay, that's not, and is that fairly the norm for Memphis, is 8% with most property managers would, or,
Yeah, I've paid it. I've had 2 different property managers in Memphis, and it's been 8% at both.
oh, okay.
So it's not an anomaly, at least in Memphis. But yeah, I know it is very market dependent whether you can get those lower rates.
Yeah. Yeah. Would you know, like, if they would offer someone who just has one property 8%, or do you think you have 8% because of the number of doors you have right now?
I don't know for sure.
Okay.
I'm not positive about that.
Yeah, I know I've come across some property managers in Indianapolis. It seems like the norm is around 10%, but there's some of them have like a sliding scale. So if you have
Mhm.
like 5 or more properties with them, that it starts decreasing.
Right.
So kind of a perk to keep your business with one.
Yeah.
Have you ever managed any of the properties yourself from a distance?
No.
Yeah.
And I wouldn't recommend it.
Yeah. Have you rented through Section 8 ever?
I have one Section 8 tenant.
Okay. And your property manager set that all up, it sounds like then.
Yeah, the tenant was in place when I bought the property. So,
Oh, okay.
but yeah, among many other things that, property managers, as long as we're talking about big professional experienced property managers who are operating at scale,
Mhm.
um, those companies do a lot for you that you don't, as a remote and passive investor, you probably don't know how to do, and you'd rather not do. So one of those things is coordinating with the local housing authority who administers the Section 8 program, right, which is federally funded but locally administered. So yeah, they deal with MHA, which is the Memphis Housing Authority, which is the government agency that deals with Section 8. So as far as inspections, rent increases, things like that, that all have to be done through MHA. They do it, right? So among many other reasons why I would never recommend anybody self-manage. Yeah, that $60 a month I pay on this property is well worth it.
Mhm.
Not only, and there's also things, by the way, that you could do, but your property manager is going to do better. So, and the biggest and most important one of those is placing tenants. My property manager has 3,500 units. They have a leasing team who is measured and probably bonused on metrics having to do with how quickly they place the tenant, how long tenants stay, does the tenant pay their rent, right? They track these metrics and they, take it seriously, just like a business. Most mom and pop landlords who try to place their own tenants are so much worse. And when you read stories about people who don't succeed, most of the time it's because they're having trouble with tenants, and most of the time that's because they don't have the proper screening in place, and that's where they're falling down. So for that reason alone, your property manager is worth what you pay them, and for lots of other reasons too. Once you get into rehabs, maintenance expenses, calls from tenants, collections, all that stuff happens without my doing anything, and it has
Mhm.
allowed me, to scale to 20 doors without really taking on much, if any, additional work on my part. So it's
Yeah.
critical. Good property manager.
Yeah, I agree. I always believe that a property manager is one of your primary, team members as you build your team. Like I think when going into a new market, they're probably one of the first ones you want to connect with, even before a realtor, because you can utilize the information, the experience of the property managers of what areas are good to buy in that particular city. And then, if you are interested in buying a property that would need some work, they can then guide you on what kind of finishes you should be putting in, so you don't overdo it or you don't underdo it. So, and they obviously are very well connected. So, a lot of bigger property management companies I find are also like brokerages, or connected with a broker. So then they'll have realtors as part of their company that can help you find properties if you're not utilizing like Roofstock or other platforms such as that.
Yeah. Yeah, and some property managers will also have turnkey sister companies, right? So either they started as a PM,
Right.
or they started as a turnkey company and develop property management.
Yes.
So
Yeah.
it is a great way to network, and it's absolutely key to success. One other thing I'll mention about property managers is, in addition to all the other stuff we've mentioned from a rehab standpoint, the one rehab that I did it was completely handled by my property manager. It was like a $10,000 rehab, so it wasn't enormous, but it wasn't small either. It was a pretty big scope of work, and they do it all. So they went in, they gave me the scope of work, line item costs, so I could understand exactly what was being done. Most of that work, because I have a large PM, was done by in-house employees, so not contractors. They have full-time employees on staff for a lot of maintenance work. And it went very, very smoothly, and so that way I don't need to have relationships with contractors or technicians or plumbers or whatever. And I also really don't have to make choices about the finishes, right? They know, right? Like
Yeah.
they've got, LVP stockpiled, right? It's one color, there's no choice, like you just do it in the standard sort of finishes. They use the same paint color on all their homes. They're not trying to be creative here,
Right.
as far as the finishes. It's really just about durability, safety, and quality, but also cost. So it was very simple, very seamless, quite affordable, and it was really successful. So I'm actually now, with the confidence of that experience, much more open than I used to be to properties that do need rehabs, because I'm pretty confident I can get it done successfully.
Do you mind sharing the name of the property management company you're using right now?
I don't. I use REI and Company, which is a local operator who is in only Memphis. So yeah, but they're pretty good.
What's the name again, you say?
REI and Company.
Radiant.
It's owned by a guy named REI.
REI. Is it REEDY or?
Mm-hmm.
Okay, REI and Company.
Yeah.
Very cool. So if you're interested in Memphis, you might want to reach out to them. Give them a plug already.
Yeah.
Would you mind if we went back into the maps maybe, and you can kind of show us the general area, if there is a general area that you focus in when looking for new properties, or in the
Yeah, sure. You'll get a better view if you go back to the blog.
Okay.
And you can find one of those monthly portfolio updates. Yeah,
right.
so
Like this one?
Just zoom in on that photo there.
Oh, okay. Well, I guess I can. Okay, so it looks like you focus in this northern section. So what area is that considered? I see Bartlett, but
yeah, so you're basically looking there at the whole Memphis metro area. So inside the interstate, where I own only two properties, right? So that big empty section in the middle includes all of downtown Memphis, the Graceland area, the Midtown area, and sort of a spine going east to west, which is the most desirable parts of town, right? Through the Midtown area, then going east all the way out through to Germantown. You notice I don't own any properties there, right? So I generally focus in these B and C neighborhoods to the north and south of town. Those are definitely the most popular areas with cash flow investors. It's where the turnkey operators primarily operate. So yeah, the number of different neighborhoods that are represented there, but the character of them all is similar, right? So there'll be homes anywhere from 50 to 150,000 in these neighborhoods. You'll have a pretty high proportion of renters versus owner occupants, and those are the neighborhoods where you're going to make your high cash flow.
Okay. And is that also kind of where a lot of your property management, have you had conversations with them on areas to invest in as well? And do they generally say those areas too, or have they also suggested any other sections of Memphis?
Yeah, they're all pretty aligned. Most of they've talked to a couple of property managers, turnkey providers, other investors. Pretty much the take is the same on which neighborhoods are going to work. So there's a few interesting little pockets where there's if you look just to the north of my northwest properties, there's a little pocket called North Haven, and that's an interesting area because it sort of used to be, it's a little pocket of residential only, and it's separated from the rest of the development. And it used to be sort of a stay away from here sort of area. That was the advice to investors. But now in the last couple of years, you see a lot of homes getting flipped for investors there, turnkey operators operating there. And I think the character of that is changing. So there's, things are always changing, but
Right.
The numbers don't lie, right? So ultimately, you're constrained. If you're looking for cash flow, you're by definition constrained to lower cost neighborhoods. So the key there is really just to find steady, reliable neighborhoods where you're going to be able to find quality tenants and just avoid, the worst areas where you might struggle with that type of stuff.
Yeah.
But
where would the worst areas be in Memphis? I mean, you said North Haven's kind of turning right now. So is there a section in Memphis still that you would not advise people going into?
So, the places where, I'm not really interested are South Memphis. So inside the interstate, the 240 there, south of downtown Memphis. So yeah, right where you're, and then to the west of that. So those are pretty rough areas that, historically underinvested areas. And homes are cheap, so you can, the cash flow looks good on paper for sure, but you always increase your risk a little bit as you move into those areas. And of course, that's true. All of this is a sliding scale, right? It's not off limits and on limits necessarily. Like, there's investors who really love, South Memphis, and that's their game, right? Is to get, the $25,000, $30,000 house, rent it for $550, and deal with what comes. I don't think that's best for my strategy because, I'd prefer to have fewer headaches, and I'm remote, right? So both because of geography and because of my, preferences as an investor, that's not going to work for me, even though the yield might be even better. And then there's places like Fraser where you can see I've got three. The three to the northwest there are in Fraser.
These right here.
Yeah, which is a C neighborhood, a lot of renters, a lot of turnkey activity in the last 10, 15 years. It's been a primary target for a few of the big operators. But there are also investors who will say, no, I don't want to touch Fraser. It's not, I want to be in better neighborhoods than that. So each investor has to sort of decide what their risk tolerance is and where they're going to target, which types of neighborhoods, types of price points, types of properties they're going to target as part of their strategy.
Right. Yeah. And again, once you get connected with a property manager, they're going to be the key source to have all that information, finding out, what your criteria is, and then pinpointing what neighborhoods, would fit that or meet that criteria. Yeah, I know a lot of investors say like my number one rule is, I invest where I would feel comfortable collecting the rent check, even if you don't live there, making sure that you feel comfortable if you had to knock on someone's door to collect rent, that you're not concerned about walking in that neighborhood. Would you say Memphis is very block by block, or is it, or neighborhoods fairly consistent with each other, or like far as like a section of a neighborhood, the houses of being, in similar condition and whatnot, or does it just change from block to block?
Yeah, I mean, the block to block thing is a little bit of a myth in general, in my opinion. There are some areas where neighborhoods transition pretty quickly.
Yeah.
But I think when people talk about the block to block thing, it's a way of justifying or saying that you need somebody local on the ground, with that local expertise, or even to say that remote investing doesn't work because you can't possibly know the block to block, variation. So that's generally the context where you hear that idea. So I think most of the time it's a little bit overblown. But probably like everywhere else, there are a few areas that transition even from pretty rough neighborhoods into the best neighborhoods in Memphis quite quickly. But it's not like that's a secret. All you have to do is look at the home prices. The people who live there understand what's different about those neighborhoods, and the market forces create a $50,000 home here and a $350,000 home here. I don't need to understand all the underlying forces for that. I just need to look at the home prices, which are all public. I can go on Zillow and figure it out in 2 minutes. So yeah, it does happen. Most neighborhoods don't experience that sort of rapid transition, but when they do occur, it's quite obvious.
Yeah, that's a very good point and perspective for sure. Okay, well, I'm gonna see if we have any questions. So if anybody wants to, for our attendees, have any questions coming in, but as always, Eric, you're so thorough and very methodical, I think, in your approach. And
that's my whole brand. That's what I'm going for. So
yeah. I definitely appreciate it, and I wish I could be better at tracking our portfolios. We did, my husband is now kind of in charge of overseeing our rental portfolio. And so I said, hey, go to Eric's blog, download his calculator and plug all the information in. So it's been really helpful. And I should go when I get home tonight, I'm going to ask him like, so where are we at with our with our numbers for the month? So I hope he's keeping up with it month to month, but he's also running around chasing our 2-year-old. So that it kind of impedes.
Double duty. Well, good. Yeah. I'm glad you're getting good use out of that.
Yeah. It's easy to plug in, so, and it's just something that I think no matter if you're investing obviously locally or remotely, or if you just have one property, it's something you definitely want to get in the habit of doing, and plugging in that information month to month. Definitely helps around tax time. So
it does. Yeah, I keep very close track of things, for the benefit of the blog, but also because that's sort of, my general disposition, right? I like to know what's going on and to track things. Yeah, I think some amount of tracking is needed so people understand how the property is performing over time, but you certainly don't have to do as much as I do.
Yeah, we'll let you dive into the deepness of it, and then we'll reap the rewards from it.
Yeah.
And then hopefully encourages others to do the same for theirs. So I just shared your website, Eric, so rentalincomeadvisors.com. And then for anybody who wants to stay connected and up to date on what our upcoming market spotlights will be, I just posted my group as well, facebook.com/group/long distance real estate investors. So if you just put in the search long distance real estate investors, my group should pop up. And so you can also obviously network with other people who've been investing in other markets through that group too. And then like I mentioned, once a month now on the second Wednesday of every month, I'll be here with another investor talking about a new market. So stay tuned. I think, let me see, since we're not doing June, I think I have an idea for July. Oh, it was going to be Kansas City, I believe. So Anybody who wants to come and learn about Kansas City, we'll share that one next month or in July, sorry. The summer's so busy, it's hard to pack everything in. But well, thank you so much, Eric, for sharing
My pleasure.
again. Yeah, because Eric was one of my first market spotlights when I started my Facebook group, because I started first locally in Denver, and then when pandemic came, converted it to Facebook. So
Yeah.
it's always great to see your progress. And oh, and the other kudos to Eric, like I just, with your analysis method, you really share like the real raw picture of what it's like to own rental properties. So it's not always roses. So Eric is very transparent all the time about his portfolio and the ups and downs, which I think is important to relay, and just not give everybody this
Yeah.
rosy picture. You're going to have some downs, and you've got to plan and prepare for those to keep you afloat, for the good times. So
Yep. For sure.
thank you for that. I appreciate it.
My pleasure. Yeah, this was good.
Yeah, well, thanks again. And I hope anybody who connected tonight, check out Eric's blog and join the group as well. So, well, I know it's late now for you. So, well, maybe it's not late for you, but it would be late for me at 9 o'clock.
We're just getting started.
Yeah, right. You are in New York. So
Right.
nightlife is just now it probably doesn't start till midnight, technically. Well, thank you so much. And I hope everyone has a great evening and hope to see you again. So thank you.
Thanks, Jennifer.
Have a great night. Bye-bye.